Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about Sundial as an update. If you would like to watch my previous video, you'll find it in the description below. This video is segmented into introduction, due diligence, and analysis. You can skip through, you'll find the links in the comments below. Now, at any point in the video, if you have any questions, you can mention them down in the comments below, or if you want a faster response, my link to the Discord server that's totally free is in the description below. Now let's jump right into it. So the due diligence part is on Sundial. Sundial is a part of the massive runs that we've had in the weed industry or the cannabis industry for tickers. Now, it is a Canadian company. I'm not going to go very much in depth, but I'm going to highlight key points and key updates that happens in this video. Sundial. They have different products, including buds, vapes, coming up as well, edibles, and everything in between. It really goes on under 5 different categories. So if you would like to go on their website, they do have an amazing presentation. So today we're going to skim a little bit through their presentation, but before we go further, their 5 different products includes Grasslands, Palmetto, Sundial, BC Weeds Co, and Top Leaf. Now, it goes everywhere from here, from joints to buds to oils, etc. So we can expect as well other partnerships. I know one of them has been for weed infused beer, or cannabis infused beer. That is something as well exciting. Now, the new things we're looking about this, I want to look into their cost saving, because something interesting is with their financials. So if you were to look into their financials in a second, I'll show you exactly what I'm talking about. Right on here, if we were to go, we get to see it's a $400 million cap, and what we get to see in terms of their financials, we get to see that in terms of their cash, they're burning through the cash way too quickly. Meanwhile, their total debt, short-term debt, has been okay. Currently, they're sitting in from quarter 3 to quarter 4. They took on around, well, difference between 71 and 8, so just above 60 million more in terms of short debt. That is interesting. Now, they do have a way to pay, but the interesting thing is, what about your net income, right? So if you were to look into here the quotes, you get to see the revenues here has been a little bit rough between 2020 and year over year. It's decreased. Operating income has decreased as well, and we get to see the net income has been decreasing year over year, and that's interesting. Except in the last quarter 3, year over year, it has increased in terms of their net income, so that is okay. But we need to look into cost saving highlights. Quarterly cash used for operations decreased 69% from 14.3 million to 5.3 million. Okay, so there is cost saving cuts there. Okay, dry bulk density cost per gram decreased 12% from 1.34 grams per gram to 1.18 gram per gram. Combined CNP cost decreased by 19%, 10 million to 8.1 million. Overall, we get to see that they're actually decreasing costs, and that's exactly what I want to see. Now, in terms of comparisons with other different companies, let's say Exo, Aurora, what we get to see here, Aurora, for instance, and the company itself, Sundial has 280 million in market share. Of course, that has been increased a little bit to 400 million, as we get to see in the other one. Aurora has 2.4, Exo has around 516. The enterprise value is around 347 million based on Sundial, so the price over book is not as bad based on their estimation. Now, if you were to look into Hexo, you get to see that the actual enterprise value is 395. Meanwhile, their market cap is almost, higher. Sundial, it's the other way around. Well, actually, right now, it's almost the same thing as enterprise value because it's around 400 million. If we look to Aurora, we get to see it's also undervalued here, but today we're looking at Sundial. Now, moving on, some of the dilutive impact of restructuring, you get to see that Sundial metric, it's 2.9 times compared to, for instance, implied return of around 49%. Now, that's a bit more technical, so I'll skip there. There's been analyst coverages between all these different companies, but let's move forward. Before we do so, I want to mention something. If you haven't subscribed yet, please do, because this metric here, around 86.7% of you watch my videos constantly, yet you don't subscribe. So please make sure you subscribe. It really helps boosting my channel, help me grow, and that way I know I'm doing a good job. If you don't think I'm doing a good job, mention some comments below. Give me some feedback. Anyway, let's jump right into it. So one of the biggest things that happened here recently is their approval for 180 days compliance period. Now, what happened here is that they actually moved to basically under the Nasdaq capitalization market, from their Nasdaq global market. Right here, I'll just read it. Today announced that it has received approval to transfer the listing its common shares to the Nasdaq capital market. The company has sought transfer advantage of additional 180 days calendar day for compliance period for the $1. Now, it's going to be expecting to take hold on December 15th. Your shares will transfer through. You wouldn't even notice a change. But the big thing here is that it has until June 26, 2020 to reach the $1 compliance. So in that sense, remember when I was saying, okay, they have until end of December to reach that compliance. It is getting a little bit dangerous, and on Monday you might want to sell because guess what? Reverse split might happen. Well, now we know that reverse split, might happen, but it still has time. They still have things to do between June 26 and 2021. Now the big thing coming up is their $200 million, or up to $200 million in terms of the offering. Now, the ATM, or at the market equity program, will give $150 million US dollars of the company's common share. Now, what does that mean? Yes, that is a shelf offering. It's at the market program, so that means they'll keep selling it without really declaring a public offering or a private offering, from my experience. And what's going to happen here is by the time this is actually all sold out, maybe then we'll see a reverse split. Just because, they don't want to do a reverse split and then continue on with their offerings and then drive the price down. Usually what happens is you will get pushes, you will get massive PRs, and then you will get that push upwards. Now, $150 million will definitely solve what I was talking about in terms of their financial balance sheet, in terms of their short-term debt. Right here, we'll go back to quarterly. This is exactly what I'm talking about. Short-term debt is around $71 million. Their total current liabilities is 102. If they go on with the ATM program, that's it. They pay it off and they have $50 million or 48 US dollars aside. Now this is in CAD, so you can do the conversions, but basically they will have more than $50 million aside after they pay off their debt by the ATM at the market offering. And so that is amazing news for us. Now comes in next, hey Ed, what do you think is going to happen next? Well, that's a little bit of a hard thing to say, but first we need to look into the technical analysis, and then we'll dive a little bit deeper into the events that are going to unfold ahead of us as we discussed before. So on a 1 week perspective, what we get to see here is everything looks stable. It's still a little bit bearish on the moving averages. ADX shows in, hey, there is a potential for another push. MACD looks stable. Momentum is still positive, yet retracting. William %R is not oversold, which is good, but it's not overbought. Now, on the 1 day perspective, what we get to see that it is actually still in the trading action zone. That's where reversals are likely. So we might see a positive reversal, a push. Above 56, it is officially all bullish on the moving averages. The ADX shows in that it is actually retracting back, so it doesn't tell us much there. William %R says, hey, it's highly oversold. And the MACD is showing, be careful, it attempted a negative reversal on the 10th. But with the good news, we see a little bit of a push there. Now, on a 2 hour perspective, what we get to see here is along the same lines. It's actually still pushing ahead. It's looking a little bit like it's trying to be bullish above the 55. Remember, the other one was 56. Above the 55 cents, it is bullish. It's looking like it might get another green day. Look at that, those candles on the 2 hour perspective. Slowly climbing up, and that is good news for us, especially on a Friday. Now, the moving average band here shows that it's expected to trade 49 at the top, 44 cents in the middle, and 40 cents in the bottom. Now, the stochastic fast and stochastic slow are both showing one thing. They're showing that there might be another leg. It might be time to buy right now and ride another wave. That's just what the indicators are saying based on what we're seeing. Now, this kind of curve we've seen before somewhere around this region, or maybe around this region. You get to see it really doesn't drop below this region if you look into the stochastic fast and stochastic slow. So that is good news for us. Coming up next is significant resistances and supports. The significant Fibonacci resistance is at 102, followed by 157, followed by 202. But let's not get that far. We're going to do quickly 1 month, 2 hours, and we're going to start drawing where the supports and resistances are. A very significant support sits at the 46 cents. Below there, we're looking at 42, 38, then jumping down to 33, and then down to 32. Significant resistances sit currently at 54 cents, 7 cents, 65 cents, 72 cents, 79, 83, and then 92 cents. Now, Ed comes to the question on what do you think about this one? Do you think it still has a chance? I definitely do think, especially with the reverse split thing put aside, that is going to be being paid off by the at-the-market equity offering program. Comes to the question is hey, is the U.S. government going to pass that MORE Act? I'm not talking about the House, already passed there. I'm talking about the Senate. One of two things might happen. Now, Georgia might go to Democrats, the 2 seats, and then Kamala Harris becomes in the divided vote, the 51st vote, basically the breaking tie, and it passes on, and weed becomes decriminalized in a federal level. The next thing we're looking at could be an argument made to Mitch McConnell, or at least from Republicans. I'm not expecting from Mitch McConnell, because he did have on record saying that he's completely opposed to legalization of weed. Is the tax money that is coming in from weed, it would help stabilize a little bit off the debt that was accumulated with, printing all the money that we did in COVID. So that might be something to make them go ahead with legalizing weed. It's a little bit tough thing to say, and from anything that I've seen, it's probably going to drag on for a few months because it's not going to be something quick. Congress is very, very slow. So I'm not holding my bags on there. But do I think we're going to get more news? Or do I think we're going to get more, at least pumps and dumps, right? People are going to hype this up all day. I definitely do think so. In terms of an investment, the charts don't look good. But if you're trading, I definitely think this is a good trade. But investments, 1 year looks really bad. 5 years, it looks brutal. So I'm not holding my guns on an investment part, but on a trading, at least, even if you're swinging it for a few months, I definitely think this is worth it, but it has high risk. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.